Ladies and gentlemen, welcome to the midday market madness. And boy, oh boy, is it actual madness. Let's go ahead and take a look. I think I did that exact same joke yesterday. That's so stupid. Nvidia stock down another 2.8%. I mean, CoreWeave's down 19%. We have SoFi falling off a cliff, but this one is truly blowing me away. Nvidia down 2.8% after the greatest earnings I've ever seen any public company ever do is nuts. Let's go ahead and take a look at a tweet that I literally just tweeted. I wanted to sort of show off some expectations that could end up happening for Nvidia. Now, I don't know if this is the base case, but it's definitely the bull case. And we have to remind ourselves that Nvidia does not necessarily play by Wall Street consensus rules. They just last quarter, for example, said that they were going to come in at $78 billion of guidance for Q1 of 2027, fiscal year 2027. And that was higher than every single analyst on the street. However, if we look towards the next quarter after that, Q2, which they most likely are going to come in around 80 billion for next year because it didn't include any China guidance. And then going into Q2, we could actually see guidance reaccelerate from, now this sounds crazy, bottoming at 55%, reaccelerating to 62.5%, 73%, 81.5%, and then officially 103%. Sorry if that's a little small. I can maybe make it a little bit bigger by showing it on the actual Excel spreadsheet that I made it on. Just drop chat for a sec. I don't even know if that's any bigger, but 103% is what growth could re-accelerate to. After that, it's going to get hard to continuously grow at that rate. Q2 is just a little bit special because we didn't end up growing a ton. Blackwell ended up like that was the slowest point of growth. But still, we're talking about a company that from $46 billion in revenue, putting up high, like 40+% rates, could potentially add on, you know, another $40+ billion, over $46 billion more in revenue is crazy. And then on gross profit for this, they also expect for next quarter to bring in 75% gross margins, $60 billion of gross profit, which then would flow down to net income at an additional $45 billion. Do you know what that does to the multiple on the company whenever you replace a quarter? So the way earnings works, like a price to earnings or any trailing metrics, is that it's a running last 12 months. So every quarter that we see results, it takes away the last quarter and replaces it with the new quarter. And that sort of just continues to shift over. Well, what we're replacing is this sort of weak quarter here in Q1 of 2026 of $18.8 billion. Weak, I know, funny. With a $45 billion quarter. That goes a long way with price to earnings. And in fact, whenever you start looking at this company based on analyst expectations, okay, updated to more where I actually think it's going to come in, like whenever they say they're going to beat or come in at $78 billion of revenue, I don't think that the Wall Street consensus should be $76 billion. Why are you discounting what Nvidia said whenever they clearly told you this is not inclusive of China sales, and they're fully booked out, like they beat and raise every single quarter. So I actually think it's going to come in more like 80 billion. And then as I sort of project out for Q2 and Q3 and Q4, which the high end of guidance on Wall Street is something like $415 billion in sales, I think it's going to be somewhere closer to 400 billion. But this actually makes it the cheapest Mag 7 name out of the entire list. Like cheaper than Meta, cheaper than Google, cheaper than Amazon, cheaper than all of them from a forward PE basis. And people want to sell that off. Honestly, go right ahead. I don't have short dated calls. I'm not looking for what the price is going to be come Monday morning. So what this allows me to do is actually just buy more. And that seems crazy, but I think that this is the greatest company that has ever existed. I think that the Tesla investors and everyone getting excited about what the future of Tesla should be, those people should be Nvidia shareholders. Like the exciting future of AI and robotics and everything is being seen at Nvidia today. The earnings are happening now. But yet the stock is going down, which leads us to the ability to buy this company at essentially a 19 times price to earnings. Forward price earnings, let me clarify. But then that also leads to other opportunities, right? The companies that are actually selling those tokens. And by the way, the tokens are profitable. But CoreWeave down 19.5%. Nebius didn't even do anything wrong. Just in proximity, guilty by association. They don't even associate with CoreWeave, but, you know, guilty by sounding like they do the same thing. Down 14% back to $90. Every day, mind you, this company makes more revenue than they did the last, but that doesn't matter. And I haven't even checked the other ones. Where's Iran? I assume they're all red for the most part. Down 9.3%. Let's see. TerraWolf ended up having earnings yesterday, but they also down 9%. Okay. Shift4 is getting kicked in its teeth and face. But this one almost deserves it. Not that I believe that it should be down this much. This is probably an overreaction, but they did not have good earnings. They did not have good earnings. They did not have a good guide. And in this market, you need to be putting up good numbers and then people will sell you off. Okay. SoFi, triple beat. They never have not. Down to $17.69. Right? If you have cash, these are buying opportunities. I think that you guys said Trump quote. Let's see. Trump on using military action on Iran. Sometimes you have to. Marco Rubio is dealing with Cuba at a very high level. When asked if strikes on Iran could lead to wider conflict, he said there's always a risk. I don't even think that's just true. Of course, there's going to be risk. But yeah, SoFi also taking massive hits. So I'll keep an eye on that. But overall, I mean, nothing in terms of the actual fundamentals of these businesses make me want to panic and sell. And I'm not smart enough to sell and then buy at even lower prices. The day I do that is the day that it, goes to higher highs. Okay. Shark Ninja down 5%. Reddit down 4.4%. Atlassian down 4.4%. HIMS also down under $15 a share now, getting hit as well. CrowdStrike. Everything's being taken by AI. AI is going to kill all jobs, but also Nvidia doesn't deserve a business. CrowdStrike, all the cybersecurity names, which I honestly think are not like, there's no discretionary spend on cybersecurity. There's no shrinking total addressable market. In fact, we're actually seeing more online activity and fears of cyber concerns more than ever. In the deepest and greatest recession you could possibly think about, companies will still pay their CrowdStrike bill. This company is also down 4%. Now, to be fair, a lot of the cybersecurity names have multiples to them. They're not trading at the levels that a SoFi or an Nvidia or something like this are even trading at. So I'm not like screaming from the rooftops being like, how does the world not see it? Because there is like you can determine, hey, do we want to trade this at a 70 times or a 90 times or something like this? Like all of those are high respectively to other markets. But yeah. Nebius down 15% on CoreWeave news is madness. It is, but it's also like, this is where, stepping back and saying, I'm the patient investor. I'm the intelligent investor. Let's go ahead and just try to look at the actual fundamentals. Let's look at the risks. Let's look at the potential catalysts. Nebius is just going to continue to grow over time. They're being funded upfront for 60% of their deals. Their use case of selling, cloud for AI workloads is only going to continue to grow, and they have a lot of very interesting subsidiaries and strategic stakes in companies that are going to give them an upper hand, like a reason to win. They're being marked extremely high on semi-analysis tiers. They're not just selling bare metal. It's like their entire platforms now. I think Nebius goes up from here. But, along the way, we can see some pretty, like what's that Warren Buffett thing where he said you're going to see things that'll not make sense to you? That's such a good quote. We need to get that. You are going to see things in securities markets, something like this. What's that quote that he says? Yeah, I don't remember the exact quote to find like a nice little video of this. That's what some of these new AI tools are going to be so helpful with, of like, hey, just give me that one specific quote that he said. Show me the actual video of whenever he said that, because it's important. Like it can stay so irrational. Things can be crazy. Beyond Meat. This is a $453 million company. Like the companies like this could triple overnight. It doesn't mean anything. Like they could show good earnings, but that's not necessarily a reflection of the broader market. Dell, however, is a reflection of the broader market, and it continues to show off that parts of the AI story are better than buying the AI story themselves. But people are trying to look for alpha. Okay. Let's see. Expensive plant-based hot dogs. I'd eat a plant-based hot dog. I'm not even worried about it. Block is up 15%. This ended up coming out because they were laying off over 40% of their entire workforce. They're blaming it on artificial intelligence and that they can find a lot more use cases. But the truth is that they were a bloated company. Okay. Same thing happened at X with Elon. This was before artificial intelligence. Like that stuff has just been happening. However, it didn't stop the idea of, okay, are many other companies going to do this? And if so, like how many of these seat-based companies, Microsoft, a Salesforce, let's see what else, a Workday, something like this. These companies will end up getting beaten up on this news because people are like, okay, well now there's 4,000 less seats. Now that's they're a small business, but maybe it's a trend of a larger theme. I don't think that's the case. I think Brad Freeman ended up putting it well. He said like, this is like looking at Snapchat tell you that they missed earnings, and then you go ahead and you sell Meta because you think that advertising is doing bad. It's like, no, maybe we shouldn't look to Block as the beacon of how the overall economy is doing, right? They're just failing. They didn't do a triple beat, nothing like this. But obviously those concerns would still ripple through. Tanner, but everything is fairly valued. The P's are still moderate. Everything is fairly valued. The P's are still moderate. What? You think companies growing at 40+% rates, or like Nvidia growing at potentially 100% year over year, is fairly valued at 20 times earnings? Forward earnings? That's much, much cheaper than the broader S&P. And the broader S&P is made up of Nvidia. Nvidia is a large, large stake of the S&P, something like 7%. So that means the rest of the market, the Costcos and the Walmarts and everything are dozens of points higher than Nvidia. You know? Okay. Um, hey, could you talk about the data centers like Nebius and CoreWeave? What could be the cause of the dump at the moment? It's correlated to Nvidia, in my opinion. Well, yeah, I think it's mainly based on margin. I think people are worried that these companies are not profitable, and they don't know how favorable the long-term deals that CoreWeave is signing. CoreWeave is signing 5+ year deals, and I think people are honestly worried about, like, okay, are you signing favorable deals in favor of the customers just so then you could put up really good top line numbers, or are you really really aiming for profitability? Because this is not like you're selling a quick product. Like, here, one sec. I'm just gonna ask my girlfriend to close the door. I can hear her on the phone. Okay. Sorry about that. Just heard her taking like a business call, and I was like, I can't think my thoughts. Um, let's see. But yeah, so there was just some concern with Nebius in terms of margin, if they are actually going to make some money anytime soon. But overall, I think that growth is the name of the game right now. They know that they can sell these tokens at a profitable rate, and so they're just saying, hey, how many customers can we get, and can we focus on actually getting active power online, and we're going to get as much debt and everything, because like the math is pretty easy for them. If they know that they're fully sold out, then they know how much interest they're spending on the debt. They know how much they're going to make over the lifetimes of the contracts. They'll make it back. All right. Sorry, CoreWeave, if I didn't say CoreWeave. What did I say? Um, okay. Amit sold Nebius. That's why it dropped. Did he? Did he sell Nebius? Back down to 89. Did you start a CoreWeave position? See, if CoreWeave fell alone, I would. But because Nebius is falling with it, I can just buy Nebius. I feel much more comfortable that way. Trimmed Nebius. To buy what? He sold Nebius to buy Nvidia. Okay. I gotta have a chat with him now too. All right. In terms of the companies that are actually making real dollars in the markets, like, you do have to admit Nvidia is definitely up there. They're making real money. But I would just be worried about, like, well, I'm not worried. Like, I have a ton, but I wouldn't be selling Nvidia to buy, or sorry, I wouldn't be selling Nebius to buy Nvidia. I'd almost be looking the other way around, because that one is that's almost the next phase of where this goes. Yeah. What do you think about Iran? I don't. What do you think about the secular deals? Wouldn't that be unsustainable for Nvidia? For real, I don't understand why. Like, no one in their right mind can convince me. Well, I mean, maybe I'd love for them too, but I have not been convinced, and I've listened to every single investor try to tell me this. The cyclical deals and why people don't like them, like, this is how economies work. Like, I don't even understand. Like, Nvidia ended up giving, let's say, CoreWeave $2 billion. And they didn't just give them, they bought something for that money. Okay, they got $2 billion worth of common shares of CoreWeave. Then CoreWeave promised with that money to then go out and buy 5 gigawatts of their hardware, essentially worth of hardware over 5 years, which roughly equates to about $150 to $200 billion of revenue back to Nvidia. What did they lose? They got common shares and they got deals up the wazoo. This is like OpenAI getting deals from Amazon and everything like this. One, I've been right all along. Everyone calling for, conversations with Roy and Tevis and all of these guys, literally laughing in my face, saying, oh, it's so clear that these are commodities and that these are going to die off. And like, no, it's actually, these are very much application layer companies. And no, they're not dying because they have $110 billion now. Like, it's going to be really hard. OpenAI would need to severely mess up to lose now that they have $110 billion, having a burn rate of roughly 20 to 30 billion per year. Okay. During that time, they're not just burning, they are actively getting more customers. That now they have 900 million weekly users, 50 million subscribers, and roughly 40 to 50% of their business is run from enterprise and API services. Yeah, we talked about this company back whenever it was a $200 billion valuation. I'm telling you, this company is going to be a top 10 company, $1.5 trillion in no time. But with that being said, the reason why I'm not worried is that Nvidia, so SoftBank is a, private equity. They're looking to have share of OpenAI. They believe that OpenAI is going to build the future. I get that. Nvidia wants OpenAI to buy their hardware. They also want them to survive. Okay. So they want to keep OpenAI alive to serve their customers to then go back and buy Nvidia hardware. Nvidia then gives $30 billion to OpenAI. They get shares in return. They don't get nothing in return. Like, I think honestly, people think that they're saying, hey, here's $30 billion, come back to the store and buy lemons from me. It's like, no, we're getting $30 billion here. And then you could go spend whatever you want with that $30 billion, but no, you're going to turn right back around to me and buy my equipment. That's the biggest dividend you could ever ask of a company. I'm going out and buying Nvidia and Nebius and SoFi and all of these, and they're not buying any product from me. Why isn't that circular financing? That's a much worse deal. I'm just going out into public markets and buying shares. And then Amazon ended up upgrading their deal with OpenAI. Now they're going to be spending $100 billion at AWS, or maybe it's even higher than that. It might even be slightly higher than that. So their backlog is going to spike up. They're going to see real essentially token use from OpenAI, going to be one of their biggest customers. And they get $50 billion of a growing business. They're taking Nvidia's money and buying AMD. People think this. Honestly, people are too worked up about these articles where they end up seeing like Meta is going out and buying Nvidia, they're going out and buying AMD, and they're going out and buying TPUs. That's not what's happening. What's happening is like even so I'll say this in one part and then I'll say it in the next. What's happening is that Meta is going to Nvidia with every dollar that they have, and they're saying, hey, give me Nvidia chips. And then Nvidia goes, okay, here's all your chips, but we also need to satisfy all our hundreds of other customers that are putting in multi-billion-dollar deals. Okay. So then they go and satiate all of those customers as well. And then Meta says, hey, I'm not done. I'm still hungry. This is an all-you-can-eat buffet. But Nvidia is saying, dude, we're cooking up more meals for you, but you have to wait. But Meta's still hungry. So they're not meant to just sit there and starve waiting for Nvidia to feed them. So they need to go to other suppliers, and they're putting in these drop drop little freaking orders from other customers, and everyone's freaking out like they're turning their back away from Nvidia. Nvidia has nothing to sell them. They're fully sold out, and people are punishing companies that are fully sold out. How can you do better than selling 100% of your inventory? And then people are pointing like, I love Meet Kevin, but I think one of the worst things that he said about Nvidia recently is he goes, look at the spiking inventories on Nvidia. Why don't you compare their inventories to their revenue? Okay, it's never differed. So if a percentage of their revenue that's growing at now 73% will be 100% soon, that inventory needs to constantly grow with the size of their business. So if they're compounding at 70+% rates, inventory is going to compound at 70+% rates, but it's never widened. Okay. It stayed consistent from their business all the way back to like 2019. So back then, whenever we were doing $1 billion of orders, yeah, inventory was small. Now that we're doing $80 billion in orders, yeah, it's going to be 80 times higher. It's not a problem at all. They're fully satiating their customers, and they're building out a lot of this inventory to then, they're buying parts for Vera Rubin and all of this extra equipment that they already have pre-sales for. Look at the actual, like, I don't know. Everyone's looking for any red flag that they can grasp onto. And I just think it's funny. It's funny. The same people that are impending doom on Nvidia for next year told me that this was the year that CapEx was going to end up going down to 10, 20%. It increased to 70% year over year. Like, so while the stock is low and everyone's saying that I'm wrong, it's like, dude, fundamentally, this is exactly the case. Everyone's just worried about a future that they can't predict. Every single, including my estimations of AI, I don't have a crystal ball, but neither do these guys. And so I'm going to focus on the companies that are actually growing. Okay, let's look at the markets really quick, and then I also wanted to make a comment on Tesla had also picked Samsung as potentially working with Samsung instead of TSMC, and then TSMC. This was a while ago, maybe 6-9 months ago, and people were pointing to that and being like, oh, TSMC, like they can't handle the pressure and everything like this. It's like, no, it's because Nvidia is doing so well, okay, that they are becoming essentially the number one and only customer of TSMC. Obviously, they do a lot more stuff than this. But it's like whenever you're starting to see people diversify and broaden out, it's not because Nvidia is not being able to handle or TSMC is not being able to handle it. It's because they're too good and customers need so much. Nvidia wants to offer them that, but they can't. And they're doing their best, and their best is growing at 80%. And if that's not exciting for you, then go buy Altria Group and Walmart and be satiated with your negative growth. That was more for our Altria. Walmart's a great company and growing, but expensive. What do you think about the fears and arguments that Nvidia is cyclical? I think it is cyclical, but I don't think anyone has been able to truly articulate where that, where is that? Is that 12 months from now? Is that 48 months from now? Is that 86 months from now? Lisa Su, Jensen Huang, many of the biggest names are saying this is years and years away. And whenever Meta says that they want hundreds of gigawatts of compute, I have to believe them. Well, I'm supposed to believe Jay Goldberg of, whatever analyst firm where he's been wrong and 25% of his calls are right, and he's like one of the worst analysts on Wall Street. That's the guy I want to believe in rather than Mark Zuckerberg. Do you think he's lying to you? So, yeah, Seaport Global. Yeah, huge firm. But yeah, so I think it is cyclical. I just don't know when that cyclicality ends. And eventually, I do think that you rotate out of the cyclical names into the companies that can continue to make recurring revenue. And that, I think that is Amazon and Google and Microsoft Azure, potentially Nebius and CoreWeave, and some of these names that are going to have customers that are building their businesses on the cloud. But yeah. Let's see. Nvidia is cyclical. Yeah. Oh, that's what I just said. I want to buy the dip and no money to buy the dip. Brother, I feel you. But hopefully you're focused on making a little bit of money and you can put that back into the markets. One of my SoFi posts on X. Oh. So what's the potential load up today? Well, I think that I want to stay in the things that I know the companies. So Nvidia, Nebius, like I have to bet on artificial intelligence. I think the world's changing. Like you just saw OpenAI end up getting a post-money valuation, $840 billion. Well, who do you think they're working with? Amazon, Nvidia, Nebius. Like these are big. These are going to be big beneficiaries of that money that is still in play. You know, Zscaler was just on CNBC and they said every employee is going to have 50 to 100 agents with them right now. How many of you guys have one agent? What does that do to the token amounts that happen over time? I think that changes things. I think we're going to need a lot more compute than what we have today. Yeah. I've not pulled the trigger on Wix. No. I do. I pay out of my ass for API fees. I bet you do, Parsifal. That's why you're the absolute GOAT. Amit says Tanner stop stocks from falling. I don't know what you're doing over on your channel, Amit, but I said that my girlfriend was on the phone and everyone goes, oh, it's Amit in the other chat. I don't know what you're telling them, but the allegations have to stop. I might be sparking some of those allegations. It might be me. All right, let's go ahead and have a listen to this because this was Zscaler's comments on how many agents people might end up having.
Welcome back. Shares of cloud security company Zscaler sinking today despite solid earnings last night after the close. Joining us this morning is Zscaler CEO Jay Chaudhry, along with our John Fort. Morning, John.
Good morning, Carl, and good morning, Jay. Good to see you. You beat on the top and bottom lines yesterday. Your revenue guide for the current quarter slightly ahead of estimates at the midpoint, and yet your stock is down more than 14% at the moment, supposedly because of annual recurring revenue concerns. At these levels, your stock's down about 35% year to date after being up 25% last year. So, Jay, is your growth slowing down?
Not at all, John. We had a fantastic quarter. We beat the high end of our guidance for revenue and profitability both. Look at our results. ARR, 25% year over year. Revenue growth, 26%. Operating cash flow growth, 14% year over year. Free cash flow, 18%. Operating margin, 22%. I think these are great numbers. And if you look at our overall performance, there are only 5 major public SaaS companies with over $3 billion in ARR that are doing Rule of 40, which means if your revenue growth and free cash flow margin together is over 40, you're a Rule of 40 company. We are a Rule of 62 company. These are great numbers. And also, with AI coming on the scene, we believe we are the platform for securing agentic communication. So I'm scratching my head and say, where did the market get it wrong?
Yeah.
We are confident about our future and our results.
There are a lot of investors scratching their heads too when they see this kind of stock action and these numbers. They think there must be something in here to explain this. Now, you did talk on the call yesterday about how you are extending Zscaler Zero Trust Exchange platform to deal with these software agents that everybody is so excited about. Tell me why you expect that there's going to be so much more volume and more work for Zscaler software to do in the agentic era.
We know AI agents are coming. For every employee, there'll be 50 to 100 agents. And all these agents are like people. They're like workers. They're going to do certain tasks, which means they need to access applications. They need to talk to other agents. Imagine an agent getting hijacked on your network. They're getting hacked. It could be crazy. Previously, we talked about end user being the weakest link. Tomorrow, AI agents will be the weakest links and could cause a lot of security issues. The best way to secure AI agents is zero trust technology, which means the technology that Zscaler pioneered, where an agent can only talk to a certain application or certain agent one-on-one, unlike firewalls. And that's the largest global exchange infrastructure we built. Well, we believe that that's the best way to secure it.
So, yeah, just really quick, because I just saw this as well. Well, Claude is potentially, having difficulties working with the Pentagon on giving them full access to their products. OpenAI might end up scooping up the deal, saying that they are trying to help deploy its models in classified environments, but no deal has been officially signed. Hopefully, they can land a big deal like that. Okay, I really want to talk about this. This is very important. I said this a while ago. I think whenever markets, like names that you really like, crash overnight on no bad news, or you feel like, at least maybe if the sell-off is overblown, retail has an easy time dealing with that. It's the drawn out, the very, very long drawn out sell-offs, whenever we take the stairs down rather than the elevator down, that people have a very hard time with. This is where almost fatigue sets in. You start questioning your own due diligence. You start justifying whether or not a company is doing good based on the stock price, not the actual fundamentals. No amount of finance or economics have changed over the last couple of years. Growing net income, growing sales, expanding total addressable markets, these sort of things are still extremely important. And it's times like that where maybe you need to take a step back, look at the companies that you hold, but remain calm. Okay, a single article from Stephen Fiorillo compare banks, and I spoke on the phone. I'm not talking behind Stephen's back. I told this to him on the phone whenever he posted the article. Okay, but I said I think that he's putting up a chart to fit the narrative of what he's trying to say. That SoFi looks like an expensive bank whenever you put it across all the other bank companies, and yeah, it does. Using traditional bank metrics of price to tangible book and PE ratio. Okay, now look at a PEG ratio. It'd look like the cheapest one on this entire list. But banks don't get looked at by a PEG ratio. Well, why call it a bank? He said, well, they have a bank license. That's what they have. There's no escaping that. I understand that. But you also didn't include companies that, will have bank. Go look at Block or Nubank or Circle eventually. Circle on this list of banks, whenever they get their charter, is not going to fit into this list. Nubank definitely doesn't fit into this list because they're really quick. They're really fast growing. So whenever you find companies that are growing at 40+% rates, I don't know if it is appropriate to look at them at this same metric. And so it's almost like confirmation bias. Like whenever it's $32, you pick different metrics because then it makes sense for it being at 32. And then whenever it sells off to 17, we choose different metrics because we go, okay, well, it actually fits in more looking like this bank stock. It's like, let's make it make sense. They have a bank charter, but they're doing so much more than that. And just like Steve said, oh, well, they need the tech revenue to end up going up to get that multiple. I was like, Steve, you said $1 of revenue is $1 of revenue, and $1 of net income is $1 of net income. Okay, they're growing like gangbusters, on the financial services and the loan side, which have higher margins than the tech platform. Why is everyone so excited about the tech platform if it's the slowest growing side of the company and has the worst margins? Who gives a shit? You know? Who cares about that stuff? If it's helping their product cadence and that actually ends up flowing through to financial services, that's way more important, right? It's like Meta. Meta is spending all this money on AI. It would be like saying, hey, we need AI revenue. It's like, no, it's showing up in advertising revenue because they're making their ads better. They're making their targeting better. These sort of things. So yeah, just stay. You need to make a SoFi cope maxing video. I did make a little bit of a cope maxing video on it recently, just showing the 5-year review of the company. And I essentially said, you know, this is the same price that you could buy this company, not on a market cap basis. It's very important to understand that. There's a lot more outstanding shares than there was whenever it went public. But, you know, this company has just compounded and beat expectations every single quarter. It's hard to not enjoy that. We'll see if Noto buys on Monday. Advisor, should I sell Shift 4 for Amazon? Advise me. It depends on the type of investor that you want to be. Shift 4 has a cheaper price to free cash flow than PayPal does, yet they're growing way, way faster. Amazon, it's almost hard getting it wrong. So I think it's like, do you want to be a leader and pay the valuation premium for that? Or do you want to buy deep value and it's higher risk, higher reward on Shift 4? Yeah. Tanner, are you using the word satiated at an alarming clip today? I don't even remember saying that. Meta is Bulldog, SoFi is Chihuahua. Yeah. Do we look at bulldogs like strong dogs? I always think like I don't know. I think that's like always a weird comparison. I think of like a German Shepherd or something like this being like a big dog, you know. Bulldogs, now I just think of them as like pugs. Like you have breathing problems and you can't run that long. Sorry, that's off topic. Can we watch the CoreWeave CEO interview? It's behind a paywall. I might not have it if it depends. CNBC has a bunch of different tiers. I don't have all the tiers. But I can see if I do. Clear CEO. Where? Was this on CNBC? Is that what you're talking about? I don't know if I have it. Or I don't see it here on CNBC. Maybe it's a different provider. I for real don't see it. Unless maybe I need to just search for it. What is it? CoreWeave? Okay. Is this the CEO interview? This, yeah, okay. I can watch this. Let's watch this really quickly. This is the CEO defending CoreWeave's quarter.
But I guess, Jim, to your point, that money's going to go out towards compute from OpenAI, which does kind of get us towards our next guest.
I am not going to be pessimistic when the 10-year's going down in yield. I'm not going to be pessimistic when OpenAI, which at one point I thought couldn't get the money, got the money. Not going to be negative when I see what Dell did, and I'm not going to be negative because how much business does CoreWeave have, Mr. Michael Intrader? How much? Intrader say he is his founder. And all that stuff.
Welcome to Post 9, by the way. Thank you for being here.
Right. I got a little caught up. There. All right. How much business do you have versus how much more could you orders versus what you can do?
Okay, so I've come on the show. I've kind of been in the press a lot. The demand for the infrastructure has been relentless. It's been relentless for 3 years. We have never wavered from that position. Our clients are increasing the demand signals that they're giving us. They are broadening across the economy. They're moving from, just the AI labs and the clouds into the enterprise, into the sovereigns. The business signals are overwhelming. We are constrained by our ability to deliver more capacity to the market.
Okay, so listen, that's a positive story. Only one of the analysts thought it was bad. Every other analyst congratulated you. The stock is down very badly. You were in the business of trading. What's wrong with the stock, or what's wrong with your narrative?
Look, end of the day, my job here is to drive value and take advantage of this generational opportunity to build infrastructure in a global build out of compute. And we are doing an unbelievable job of that. We are scaling into this. We made an intentional decision to accelerate our builds, understanding that there was going to be a margin hit. But this is a once in a generation moment. And our job is to go out and to secure as much capacity as we can so we can satisfy the demands of our clients to deliver compute.
Okay, is there, and then I'm going to give it to my colleagues, but is there some level where you're saying, you know what, we're done with losing money. Let's stop losing money. Losing money's bad. I mean, I know that you've been able to sell a lot of stock. Congratulations, made a lot of money. It's very positive. But how about the fact that, like, the shareholders, at what point do you just say, you know what, guys, we will reap what we've sowed?
Look, the way that this business works is you make an investment today and you sell compute for 5 years. So every dollar that we're putting to work today is ensuring that we are going to earn dollars over the next 5 years. So we like the return profile on the investment. We talked about this yesterday on earnings that, a stabilized data center is going to throw off a margin in the mid-20s. That is a very, very healthy return for us. It gives us the scale to be able to build and monetize across our platform. I was on with Nvidia, with Jensen last month, where I talked about the fact that because they are adopting our reference architecture, it's going to give us the ability to generate returns off of other people's GPUs. They get to build the infrastructure, and we get to bring the software layer, which we are so good at, to be able to expand our TAM, expand our addressable market so that we can generate returns from folks that want to control the physical infrastructure themselves. We think it's an incredible opportunity. We think it's a high margin business that will be additive to the basic business that we have built so far. Our business is success-based. The stock is going to move where the stock is going to move. I understand the concerns that people have as they see us allocating a massive scale of money to this market. But the truth of the matter is our backlog is enormous. We are going to be delivering compute to the most important, to the largest companies in the world. We're going to be delivering compute to the broadest component of the economy. We're doing our job. This is what we're supposed to be doing.
I think whenever you're sort of standing, let's go back to sort of the gold rush, right? Because that's how I honestly think CoreWeave and Nebius and all of these companies are feeling. How many picks do you go and buy, right? Like, if the data centers and the GPUs that fill them are the picks to go mine all that gold, and you have customer orders and gold prices are going up, how many do you go out and buy? And do you go lever up because you know that the actual mining of the gold is going to take some time, but the faster that we can pick away at it, like get more picks going at the same time, the quicker we're going to actually be able to get through this demand. I think that that's important. You know, I understand that people are worried about the debt, but if they're fully sold out, they see this through essentially 18 months, and they're going to continue to see customer demand. They're talking with Meta, and they're talking with all these customers, and they're like, hey, like whenever you're ready, let's double down. Let's go from 14 to 19 billion. Let's keep going. How do you not prepare to actually be able to satiate that demand? And how do you even service customers without buying all that inventory? Like, I think people are trying to put the ideas of like, hey, this company is growing at 20+%, and they didn't have to go get debt because their profit margins ended up paying for the demand that customers are putting up. But in the business that Nebius and CoreWeave and all of these are having, backlogs are growing by 370, 380, 500+%, and depending on the different businesses. And then you want them to pay for that with the cash flows that they're seeing from their business. Like, you can't have a margin that pays for that type of backlog. So I think we're looking at it through traditional lenses, but actually we're in a little bit of a gold rush type moment. Yeah, SoFi is down new lows, not even of the day, but like of a freaking while. Let's take a look at the last year. We have not been at these levels since June of 2025. That's crazy. But yeah, maybe the next would really suck was getting back down to 1270. I don't see it happening. I could never have imagined it getting down to 17. So don't listen to me. You need to go find some severely good TA guys. I'm not one of them. But I will be adding, my friend. Glad you came back to the afternoons. Dude, I took one day off, and honestly, I missed you guys so much. I felt like I lost my whole microphone. I was like, oh my, like I can't talk. And then sometimes I have these conversations with my girlfriend, and I'm like, you and your friends don't even know what's happening. Like, I'm trying to show her base 44. I'm like, babe, stand right here. Like, look, any app that you could possibly think of. And I'm like trying to and then she's like, well, it's not exactly how I envisioned. I was like, it's one prompt. It's one prompt. You have to imagine. Like, sit down with this thing for a weekend and then tell me it's not what you imagined. So I'm so happy to be able to talk with you guys about like-minded interests. It's an amazing time to have a community like this. We can stay strong together. Is Blue Owl going to kill SoFi? Not at all. I mean, there might put pressures, but it's not going to impact their business at all. This is the great thing about owning a loan platform business or anything like this, is like, you could be worried about private credit or something like that, but actually it doesn't impact SoFi at all. They sell their loans for cash. They don't even touch them on their balance sheet in the loan platform business. That's going to companies like Blue Owl and everything like this. And then in terms of the performance that SoFi has on their own loans, one, I mean, they have an unbelievable amount of cash as sort of like as a cushion. And then two, we haven't seen any loan deterioration, not even a little bit. So, yeah. So SoFi's taking a big beating here. Let's see what else is absolutely getting clobbered. Figure down 21, CoreWeave down 20. Duolingo, I had spoken to some bulls that were buying this on the way down. They were essentially saying to me, like, the story has actually changed. That the growth on daily active users, even with them turning off ads and all of this stuff, is not as much as they suspected, and that they are slowing growth. And this company was supposed to be a very, very fast grower. Sezzle down 15. Nebius, this is the first company that I hold in this list, down 14.3%. And legitimately, they didn't even have any story. This is a story based on, CoreWeave. CoreWeave went down, and Nebius is getting dragged down, guilty by association. Even though they had a triple beat and all was well. All right. Let's see. Ugly day, says Amit. It's true. Question: if SoFi is below $18 today, is it not eligible for S&P next month? My understanding, from what someone told me, is that from the day of they're picking the actual companies that are going to go in is 5 weeks before they actually get selected. That day was a few weeks ago. So the day that they like the requirements need to be met, SoFi was in the running. Now, are they going to get picked for the S&P 500? I'm not sure for this quarter, but I am very confident for the full year of 2026, and that's what I care about. Full year of 2026 adds multiple more quarters of continuous growth. That would make them, an even potentially better buy. And then at these valuations, it doesn't even look like they're putting in a company that's expensive. So we'll see. Companies that are doing very well today, Block ended up killing off over 40% of their entire workforce. Good pay packages, all of this stuff. The market is sort of looking at this like it's another reason to sell off the seat-based software names. But honestly, I think that this is just Jack Dorsey bloat at its finest. Not the first company he's done it for. And knowing him as a serial entrepreneur won't be the last. But yeah, both Cash App and Square underperformed. Netflix ended up getting the breakup deal that actually finalized between Warner Brothers or Warner Brothers Discovery and Paramount. And so Paramount agreed to pay the breakup fee for Netflix. $2.8 billion goes into Netflix pocket. That's a lot of customers, man. At a $20, $2.8 billion. Someone pays a $20 a month subscription. I don't even know if it is that high in America. I think it's like closer to 15. But let's say they pay an annual rate of $240. That's 11.6 million customers paying a full annual rate of $240. That's crazy. Good little bump. That is a good little bump. How are we feeling about Reddit here? You know what I feel about Reddit? I think Reddit is very cheap here. But in terms of the companies that I want to be holding whenever everything is starting to sell off like this, what's it called? Where is Nebius? I think that there's other companies that I like in the markets that are also selling off. And this company is getting too cheap. $22 billion market cap is too cheap for companies that has, minority stakes in their own company is worth probably $6 to $7 billion of that. And that's not including the actual Nebius, like core business that's growing at 400+% rates. It's too cheap for me. So Reddit looks cool, but I'm focused on the big total addressable market change right now. If everyone's going to have 50 to 100 agents, and right now some people have one, like the really crazy engineers have a ton, and they're already orchestrating and acting like managers of agents. But that's where the world's headed. Yeah. Okay. I love AI focused, Tanner. Dude, I've been AI focused for like years now. It's just there's been a premium for it, right? So it hasn't been a screaming buy. And there's been a couple times where I get really loud. I think the DeepSeek moment for Nvidia was one of those moments. I think now is one of those moments where I'm like, okay, the narrative exists, but the sentiment has changed. And the sentiment's getting very bearish, yet things look, you know, very expensive. or sorry, things look very cheap. Sorry, I looked over, I got distracted. I'm easily distracted. Did Tom Lee comment on Jane Street? I think he did. I didn't, I don't have a source, but I remember him talking on some podcast recently about it. Yeah. Okay. Let's go ahead and, so I talked about Nvidia. If you guys didn't see my full sort of case for Nvidia here, check the beginning of the live stream. We ended up covering that. PayPal job cuts, Robinhood. Let's talk about this. This was not my original idea. I got this idea from Gov, who is Wolf Financial. The next chapter of Family Finance starts on March 4th. Tune in for Robinhood Presents Take Flight. Now, at first, I couldn't think, honestly, my ideas of what this was were honestly comical. I was like, they keep showing this airplane thing. Like maybe they're doing like concierge stuff, high, maybe airplane points or something like this, like airline points. None of that's right. You know what I think it is? This was Gov's idea. There's a tool called Autopilot. And it's essentially like copy trader for eToro, where people can end up copying other people's trades, and you can follow along with other people, like really good, like legendary traders and stuff like this. I think the whole plane thing, it's got to be about Autopilot. And now they said family finance as well. Next chapter of family finance. So I looked to my friend in the chat. I don't know if he's still here, but Amit was here earlier. Okay. Amit is somebody who pays attention to the markets all the time. And he's the guy. He's the sheep in the family who cares about the markets, and the rest of them couldn't care less. I'm very similar. However, I don't manage or give my family any recommendations on stocks. But so like whenever he buys Nvidia, like he talks to his sister, his mom, his dad, all of these people. What if there is going to be some sort of family tool in Robinhood where whenever Amit makes a trade, it makes a trade for the rest of the family? And this actually gets many people involved. So like whenever I'm making trades and buying SoFi and buying Nvidia, it also does it for my girlfriend as well. What if? Yeah, I didn't mean sheep in a bad way. I was going to say like the black sheep, like he's the odd one out that actually cares about markets. That's where that came from. Amit said that would be so stupid. All right, well, I take it back. I take it all back. Doesn't exist. But I think the autopilot thing is true. I think that's true. I can't think of what else it's going to be. I can't think of it. Take flight, autopilot, family finance. I didn't change my mind. It was a joke. I didn't change my mind. That was for comedic timing. I think it's all tax estate financial planning. That would be so boring. You could be right, because I did see them post something recently about understanding estate planning. But that would not change the market cap at all. Like there's no TAM expansion at all. Robinhood Airlines. Well, I did see something about a Robinhood lounge, but I didn't know if it was real or if it was AI or not, because I haven't seen anything about that. And I, let's see. Did I save it? There was some sort of Robinhood lounge in one of these airports. It was AI. I assume so, because I would have saw like people talking about that being built. International expansion, yeah, but they've been doing that without a press, or like without an event. And I don't know. Why would they be doing that in JFK Airport to say, hey, you can trade whenever you're in Dubai? It's like, okay. How's that family finance? You guys don't get it, Hood. It's a transportation play. We'll see. I'm going to stick on the autopilot thing. I think that fits the narrative of take flight. Take flight, estate planning. That's like, what, take a flight to your death? Like, what does that mean? Say goodbye. That's what the event is called. Robinhood presents Say Goodbye. Happy endings. Robinhood presents life insurance. I'd be pissed, man. UBS upgrades Palantir to a buy from a neutral rating. Price target of $180, and the analyst ended up saying that they recommend that investors take advantage of the negative 35% drop from the peak for this premier growth story in software, and a company that is at the nexus of two of the most important, powerful spending trends, AI and data. Ooh, the company doesn't care. The investors don't care, I should say. At 50x our 2027 free cash flow estimates, Palantir shares are now very attractive given the estimate for roughly 70+% revenue growth in 2026 and a stable mid 50% margins. Interesting. Tanner, yeah? Did I do something bad? Okay. Plan for more down next week, folks. But why? Why? Everyone says this and it never ends. It just keeps falling until it doesn't. Be some other account I haven't seen on here before that's like, say goodbye to your portfolio tomorrow, and then it goes up. Eventually, 50% of you guys are going to be right. 50% of you guys are going to be wrong. Honestly, how will we even know if Noto buys on Monday? So he has, I think, 48 hours to report the SEC filing. However, he doesn't have to wait. Usually, Noto wants to get the signal out there that he ended up purchasing. So he ends up putting it out in like 4 hours. So we'll know on Monday if he did buy. If he didn't buy on Monday, it could mean that there's a potential acquisition target. Remember, they're not the only company that's getting cheap right now. Companies that they could be looking at acquiring might be getting cheap. Who knows? Do you ever go on margin to buy stocks? Not me personally. But boy, oh boy, have I been thinking about it. But no, I've not gone on margin. I get some of those updates where like they'll send you like, this is how much you're eligible for. And I'm like, ooh. Now that's a big freaking number. I really do want to take advantage of it sometimes. But then, you know, SoFi goes down to 17. What about Figma? I don't like, I think there's a couple cool names. Like Figma or Wix or some of these names, but I just don't know if they're as clean of a play as Nvidia or, you know, Nebius or something like this. All right, ladies and gentlemen, let me go ahead and check CNBC. Amazon's a cheap stock and there's opportunities there. Yeah, let's go ahead and see this. Oh, wait, actually, there's one other thing here. No great incentive for OpenAI to go public, says Axios. Capital. However, dude, people don't realize they just raised $110 billion. That is so, that is so many dollars. Like, they will be fine. All the sort of idea that they're going bankrupt or going away, like, for real, write all that off. They have $110 billion. They're fine. They've officially made it fine.
Steady portfolio manager at DCLA. And Sarat, you're looking at, we've talked about some of the software names before. Are you still looking through them to find some names to pick up here?
I am. You know, we still like Workday, Salesforce, Intuit. These stocks are now trading. I'll take Workday and Salesforce trading at 10 times cash flow. And they just had their calls this week. And if you listen to them, they're using AI. They're going to be enablers of AI, and their cash flow is going to be increasing. They're going to buy back shares. So right now you're in this scenario as sell first, ask questions later, and it's really going to have to be execution. They're going to have to show that they're growing 10+% like they said they were going to. I mean, one of them even said 13%. And I think that's the case. So right now with the market the way it is and the risk off day we're having really weak, these are stocks that most investors don't want to touch right now.
You also like Amazon. The stock's gone nowhere in a year. Big partnership with OpenAI. Obviously, they have a rooting interest in making sure that Google doesn't win and run away with, with Gemini.
Yeah, and Amazon's got so many different moving parts to it as well. I mean, if you look at just the retail side, you look at the cloud side, and they're going to be using robotics. And they're trading at 20+ times earnings. So it's a cheap stock. It's another one of these stocks that people are using for source of funds. So I do think there's opportunity there as well. And again, these are now, it used to be you buy these stocks based on any time they mention AI or something like that. Now it's execution and cash flow, and all these companies that we just talked about have that.
And finally, and maybe the hardest one is what's going on in the private credit space. So I don't know if you'd pick up any of the private equity names down 40% here. They're pretty indiscriminate selling. Look at the banks today, Goldman down 7%. That might be an overreaction. Some of the other major names down 3, 4, 5. So either in the epicenter, are you looking at doing anything, or even with some of the financials?
Well, I do think, and you've had a couple of guests talk about this, I don't see how tangentially these are getting affected other than maybe people are thinking these are going to affect the wealth management businesses, some of the products they're selling. But that's a huge amount to take off some of these companies. So I would, we still like Morgan Stanley, JP Morgan at these levels. These are very well diversified companies. They're not really in this space. And I think, the sell-off that started with Citrini now, today when you're getting the risk off on the credit side. So there are going to be opportunities. I don't think it's catching a falling knife, but it's definitely kind of every day it feels worse. And that's when you get to pick up some of these very high quality companies, especially in the financial space.
Yeah.
Ladies and gentlemen, it's time for me to go. Look out for a Nvidia video from me. I'm going to be trying to put that video out by today, hopefully, and then end up getting out some other products or other videos by the weekend as well. I want to try to put out a new bank update. This stock is also selling off. Company looks in perfectly good shape. Get in your sleep this weekend, ladies and gentlemen, if you haven't already. I don't have a sleep tip for you. Wasn't a great sleep from me. However, I put in decent results, but my hours that I actually did sleep, not too great. But yeah. All right. Until next time, thank you all so much for watching. Really do appreciate your time. If you haven't already, subscribed. Dude, I need to go back to bed. Love you guys. Peace.